Well, everyone, hope you're all doing great. Welcome to the new webinar. In this webinar, what we're going to talk about is supply and demand. So pretty much, I'm going to teach you the fundamental of the supply and demand, or the support and resistance pretty much. I'm going to teach you first the support and resistance, because if you understand the support and resistance, fundamental is going to be much easier. So we're going to call the support and resistance. Now, I'm going to teach you the 0 to 100, the fundamental of the support and resistance, how support and resistance create, and how you can identify the best support and resistance in which time frame to get the most chance of the reaction from that. So first of all, let's just start with the support and resistance. You guys know there are some times that price tap to some area and it start to reverse. Let's say if price come like this. There is sometimes that price tap to area and come down. And opposite, sometimes you see price just go up, okay, and come down, tap to the area and start to go up, right? And you 100% sure that you hear about the support and resistance. So which we're going to talk about how you can find these support movements and how you can find this resistance movement, okay? So the support move going to be to the upside and the resistance move going to be to the downside, let's say. Now, first of all, we're going to start with the order block. So let's imagine we have an order block here, right? We have a bearish order block here. Now, listen up. What we are expecting is price tap to the order block and give us the major move to the downside. But what if price didn't respect this order block and come up and take the high here? So in this case, this order block failed. Let me write here, this order block here gonna fail, right? And the failed order block with the break of market structure gonna always change to the breaker block. So what is the breaker block? I think there is a lot of different name for the breaker block. I don't know. I forget some names about the breaker block. Maybe you call it different, but it's the same thing, right? The failed order block gonna change to the breaker block that we are expecting to price come down and still get the support from this area and go up. So we're gonna call this a breaker block. I don't know if you use a different concept and if you call it a different thing. So that's the same thing. So don't get confused. Now the failed order block gonna change to the breaker block. Now once we have the breaker block here, it doesn't matter if price respect this or if price fail this breaker block. We don't care. So after price mitigate this breaker block here, okay, this area, if we are below this area gonna be resistant, and or if we are above this area gonna be support for us. So let me show you guys example. Take a look. This is an order block, a bearish order block, right? So price tap to this, we are expecting to price give us a bearish reaction, or at least a reaction from this area, right? But what's happened, price failed to give us the reaction from this order block, the main and the major reaction. So price gonna break this order block and create a break of market structure right here. So that means this order block failed for us, right? So now we know if the order block failed, from this area we can expect the breaker block. So same thing that I teach you, how you can identify an order block. That was a quick question. How I choose an order block, if I want to choose a bearish order block, a last bullish candle before bearish move. See, this is the last bullish candle before bearish move. If I want to choose a bullish order block, a last bearish candle before the bullish move. So I'm choosing this area here. So that's it. So the last bullish candle and bearish candle before the bullish or bearish move. So now let's see. Yeah, price didn't respect this area. So the order block failed, breaker block failed. Now, as I told you, if we are below this area gonna be a support. A resistance for me. Okay. So I can put the stop loss here. Now I can look for position right here. And see, price tap to this. Was a little bit, just fix this. Tap to this area. Stop loss above this. You can easily enter in this area. Let's put it right here. And you can target the nearest low. or the, let's say, the last liquidity that you have here. It's depend on you. Done. See, this is a resistance. But if price respect the breaker block here and go up, this area would be support. Now let's talk about which time frame is the best for identifying the support and resistance. Now, forget about the low time frame. If you want to choose a POI that you can look for buy or sell on there, forget about the low time frame, okay? Because in the low time frame, you have billions and billions of the POI here, and you don't know which one is valid, which one is not, okay? If you are day trading, you can go in the daily time frame and you can look for your POI in the daily time frame. So in this example, take a look. I have an order block here, open area, price tapped it, and I'm in the bearish market structure, price reacting to this. I have an unmitigated weak area here. Okay, if you cannot see the screen, just rejoin again. So in the daily time frame, let's say support and resistance area, right? So see, this was a bearish order block, didn't get respected. Now this area gonna get support. No, wait a minute. This area will be. This was an order block, price didn't respect it. The breaker block didn't get respected. Now see, price tapped to this area, a little bit reaction. But mostly, we can go with this area, to choosing this area as a support and resistance. See, this area. Price tap to it, gives reaction. So in the daily time frame, after Asia session close, choose your nearest POI that you can see. So that POI can be support and resistance, can be order block, but in the daily time frame, choose the nearest one. If you are day trading, if you are swing trading, go to the weekly time frame or monthly time frame and choose the nearest POI. So in this example, see, price open in the weekly time frame, tap to this unmitigated, we can give the reaction. Now price tap to the order block here, even this is not, you don't consider this as an order block, price tap to the unmitigated wick here, and price start to give us a retracement. That's it. This is how you're gonna play with the POIs and high time frame to understand your whole daily bias. With just sticking to the low time frame, you can understand what's happening. So for the low time frame, you should use the low time frame to, let's say, enter a trade, enter the POI in the high time frame POI. Okay, that's the main thing.